The housing market may be presenting an amazing opportunity. I have all the details, the full reports, and the analysis for you right here in this video. Let's get right into it. All right, so you've probably seen the headlines coming out recently saying the real estate market is overheated. This thing is going to go from boom to bust. It's done. It's game over. Don't buy. It's going to zero. Well, that's one side of the equation. To make a market, we need to look at both sides because there's always buyers and sellers. Therefore, we need to look at the full picture. We need to step back and look at the 10,000-foot view as far as what is actually going on, rather than just looking at the real estate market being really, really hot right now, saying it's going down. Well, is it really, or is it going to continue going up? That's exactly what I want to talk about in this video, because the real estate market may actually be providing a really great opportunity coming up here relatively soon. So let's look at the full picture rather than just jumping on one side saying it's going up or it's going down and nowhere in between. Let's look at the full picture now. All right, so I do want to run through some reports with you in this video because there's actually some really interesting information coming up right now that could actually lean both sides, right? So let's talk through the details. All right, so a new report that was just released shows that 96% of the real estate markets all around this country right now are overpriced. I think all of us could probably agree to some degree with that yeah, markets are probably overpriced a little bit. Now, the report also went on to show that 27% of these markets out there right now, of the 96% of markets, are overvalued by at least 30%. And again, that's probably true in some markets. However, does it mean that we're going to go from boom to bust all across the entire country? No, not necessarily. In some markets, yeah, maybe that may be the case where we might see somewhat of a pullback in prices in the real estate market. Now, here's what also is interesting. Just a few months ago in December of last year, the reports were showing that it would take 24% of a person's income, like 24% of a person's full-time income, to pay for a mortgage payment on an ongoing, monthly payment. However, now they're actually showing that the same person would need to spend 34% of their monthly income to cover a mortgage payment. So as you can see, it's gone up 10%, right? So for example, let's just say that a person earns, $10,000 a month. Again, I'm just giving you a quick example for easy mathematical purposes. Let's just say that a person earns $10,000 a month. Well, back in December, they were spending $2,400 each and every month on a mortgage payment. Again, just using these numbers for easy mathematical purposes. Now, as of today, because of prices continuing to rise and interest rates going up, that same person would need to spend $3,400 on the same exact mortgage payment, right? So you can see here, prices are certainly going up as far as mortgage payments because of interest rate increases and prices that have continued to go up here over the last 4 or 5 months or so since December of last year. So that's some pretty interesting stuff. Now, again, on the same kind of theme of all of this going on, let me continue on with this. And we know the Federal Reserve is coming out right now raising interest rates. Let's put this into perspective as well, because this is also very interesting and very important to understand. So about a year ago, interest rates were sitting around 3%, in some cases actually sub 3% on a 30-year fixed rate mortgage. Very, very good interest rates. If you happen to lock in during that time, congratulations, that's an amazing rate. It's practically free, right? That's very, very cheap money. However, today, interest rates are sitting a little over 5.25%. 5.27% is where rates are sitting on a 30-year fixed rate mortgage. So we're up about 2.25% just on a 30-year fixed rate mortgage. That's a big, big change right there. That's going to make a lot of payments go up significantly for anybody who's out there right now still searching for a house. So if you've been looking for a house for, let's just say, the last year, your payments have really, really changed, or the purchasing price of the home that you're looking for has probably also changed simply because prices have continued to go up a lot over the last year or so, and interest rates have gone up. Therefore, the amount of house that you're able to buy these days is probably significantly less, right? Just because prices increasing, interest rates increasing, therefore your payments going up. So you kind of know how this whole thing shakes out, right? So these are some of the arguments that we're seeing on some sides out there saying this market is due for a massive correction. And actually, another report that came out as well that I want to talk about quickly is saying that real estate prices have gone up 34% just over the last 2 years. That's a lot, right? Let's be fair. I think we can all say That's a lot. Generally, the real estate market goes up about 4.6% generally each and every year going forward. So again, if we can see that it's up, multiple times that just in 2 years alone, that's a lot. That's like a big increase, right? So we got to pay attention to all these parts. However, now let's take the other side of that equation and talk about what we can anticipate going forward and discuss the positives rather than just looking at it as, oh, wow, this is all negative. That means that the market's going down, right? Well, not necessarily. It may go down, which may not be such a bad thing after all. But let's discuss how much it may actually go down. Now, another report is actually coming out saying they're actually anticipating real estate prices to continue up by another 5.2% this year, which would actually be, let's be fair, significantly less than what we've seen over the last 2 consecutive years, where it's been about 15% or about 16% each year over the last 2 years, right? Just based on the information that I just gave you. However, another increase of 5.2% would still historically be better than what the market usually does on an annualized basis. 5.2% would still be a pretty nice increase in the real estate market this year, right? So that's something else we got to take into consideration. Now, another thing too that we want to also look at, yes, with interest rates rising and inventory still being very low, supply being very low, maybe some people are going to start stepping out of the market simply because prices have continued to increase so much that maybe they're just simply being priced out, or a lot of people, according to what I've been reading about this, are getting discouraged with this current market, right? They're trying to jump in. There's 27 offers on every single property. And, usually it goes to somebody that overbids by, $40,000, $50,000, some insane amount of money over the actual asking price. Well, that's something else that's really discouraging a lot of people right now. So prices continue to move higher. Interest rates are moving higher, pricing a lot of people out of the market. And some people are just saying, you know what? I'm just frustrated with the whole process. I've made 17 different offers. I've always been overbid, and I'm not willing to overbid on a property by $40,000 or $50,000 just to secure it. That's nuts. Nobody should have to do that, right? Well, unfortunately, that's the market that we're currently in right now. But here's the thing. Sometimes these reports that are coming out now are saying, well, all of this combined is going to mean that the market's going to crash by 20, 40, 50%, right? Probably not. And here's why. Based on the further analysis and taking the other side, once again, looking at this equation, there's so much pent-up demand right now for houses. Inventory and supply is very low. Unless we get a massive dump of supply and inventory onto the market, it's highly unlikely that this market is going to go down. Now, don't get me wrong. I'm speaking generally across the entire marketplace, right? The entire United States as a whole. But again, we got to consider this as well. Each individual market is very different. The market in Seattle, Washington is very different than the market in Los Angeles, California. The market in Los Angeles is very different than the market in Chicago. The market in Chicago is very different than the market in Austin, Texas. And the market in Austin, Texas is very different than the market in Miami, Florida, right? You get my point. The markets are very, very different. Some markets may go down. Some markets are very much overpriced. We understand this. We all know this. But at the same time, there's so much incredible pent-up demand right now. That's why we're seeing multiple offers on virtually every single property that hits the market, multiple offers. And when I say multiple, I'm not talking like 2 or 3. I'm talking 10, 15, 20. I saw a report just a couple days ago that said that there was a house in California, got 75 offers within the first 2 days. That's nuts. I mean, seriously, 75 offers within 2 days? The seller must have been grinning ear to ear. I mean, seriously, that is like the dream of any seller right now for any market, to have 75 people come in and want to buy your house, and they're probably bidding way over asking for that. That's nuts. I mean, seriously, that is nuts right there. But my point is, even with the interest rates going up right now, with the lack of supply, the lack of inventory, but there's so many buyers out there right now. Even if this market, even if say half of the buyers step out of the market, we're still going to see a massive supply of buyers out there trying to scoop up any remaining houses that are on the market because supply and inventory is still so incredibly low. Now, another thing I want to point out as well. Some people out there are saying these interest rates right now are really going to smash the real estate market. It's really going to take prices down. It may take prices down, but let me tell you another report. The reports out there are showing that the statistical averages of everything going on with buyers right now, it's showing that 33%, or about 1/3 of the buyers out there buying houses are cash buyers. Do cash buyers care about interest rates? They couldn't care less. They're not paying interest rates. Cash buyers do not pay interest rates. So why would they care what the interest rates are doing? They couldn't care less. They're paying cash for houses. So yes, maybe some people will step away from the real estate market because interest rates are getting kind of nuts right now. They're moving up significantly, and it might price some people out of the market. But at the same time, we still have 1/3 of the people out there paying cash who don't care one bit about interest rates. And these are probably also the people that are coming in overbidding on properties because they don't have a lender to contend with. They don't have a purchase price to contend with. They don't have interest rates to contend with. They simply have their bank balance to contend with, right? And if they have the extra bankroll, they can do it, right? It doesn't matter to them. They don't care. If they want the property, they throw down cash. They usually have very good terms as well with that. They can close quickly in many cases. Therefore, this is what's happening out there right here, right now. So as we look at both sides of the argument, some people are saying this market is due for a massive correction. Some people are saying we're due for maybe a 5 or 10% correction. If that's the case, a 5 or 10% correction, that wouldn't be no big deal for the housing market. That's nothing. Seriously, a 5 or 10% correction is only that, a correction. It is not a crash. It is not a bust and boom situation. It is an opportunity is really what it is. So if you happen to be in the market to buy a home, to refinance, anything like this, or to sell a home, anything like that, again, just remember this much. Seasonality plays a role in, putting your home on the market. But another thing too is even in the case that interest rates continue to rise and if the market does actually experience some type of pullback, 5%, 10%, something like that, if you're not in any rush to buy or any rush to sell, you may be better off just holding on for a little bit longer. But again, I just want to let you know this much. I'm not here to give you advice. This is not financial advice. This is not real estate selling or buying advice. This is not advice in any way, shape, or form. I'm simply telling you the analysis is showing that there are so many buyers out there right now. There is so much incredible demand on the market right now that even if half the buyers walked away, there'd still be incredible demand for properties. Just look around out there. Call up any real estate agent in your market. Talk to anybody. Go to an open house and ask them, are you seeing some demand right now? Are you seeing multiple offers? You're probably going to hear them laugh and say, it's nuts. People are bidding $50,000 over. I've actually seen some reports coming out. Some homes over in California. Now again, California is a very expensive market, but I've seen some homes over in the Bay Area, in like the San Francisco area, that are being offered $1 million over asking price. So let's just say the home is listed for $1 million. I've seen some reports coming out saying people will come in and offer $2 million cash on a house that was listed for $1 million. So is that a sign of a market that's about to roll over? It certainly could be, because that's irrational exuberance, right? So a lot of people are very, very excited. A lot of people are throwing around a lot of money, but at the same time, it's a cash buyer. So do they really need to worry about a lot of different factors? Not really, right? So at the end of the day, this market actually may be presenting a really great opportunity. Is the opportunity right here, right now? Probably not. The opportunity may not be here for a few more months. If this market does happen to pull back 5, 10%, something like that, if you're on the buy side of the equation, that may be your opportunity to jump in, because there may be a lot of other people thinking that exact same thing. When this thing comes back down a little bit, I'm going to be here, I'm going to be ready, I'm going to buy. And again, if supply is low, if inventory is low, that just means that those houses are going to be snapped up really, really fast from the from the massive amount of buyers that are out there and the few sellers that are willing to put their homes on the market. Especially if the market does pull back, that just means that less people are going to be willing to sell, right? Because everybody wants the top dollar for their house, right? So if everybody sees that their house is worth, say, $325,000 now, today, and all of a sudden in 3 months it's $300,000, they're going to say, I'm not really interested in selling anymore because I want $325,000. Right? So the inventory will become even less. Therefore, more people trying to fight for the same houses and the same properties that are on the market, right? Equaling more demand for basically less supply. Make sense? So this market is probably not going to be slowing down anytime soon. It may slow down in some markets a little bit, But for the most part, this thing probably has a long, long runway ahead of it, and it's probably not going to slow down anytime soon. We probably have another year, year and a half, maybe even 2 more years of this craziness with the real estate market. And again, every single market is very different. The market on the East Coast is very different than the market in the Midwest. The market in the Midwest is very different than the market in the South. My point is, you got to watch your market very closely. But overall, these are some of the reports that are coming out right now. You got to watch all this stuff kind of closely, especially if you are on the buy side or the sell side of the market. You got to watch all this stuff because it may be presenting a pretty great opportunity to get back into a market that is honestly just raging higher, right? So I don't know. You got to do what's best for you. Anyway, want to lay this out for you, let you know what I'm seeing with all the analysis. I enjoy watching the real estate market very, very closely. I also enjoy watching the stock market very closely as well. All markets I enjoy watching just because you got to watch all this stuff closely. Everything is highly correlated. One crash in one market may lead to a great opportunity in another, and one crash in one market may give you a little bit of a precursor warning to another market being smashed around too, right? So anyway, if you like this type of content, make sure to subscribe down below so you don't miss any videos going forward. Make sure to share this video with your friends, family, social media, and of course, go back and check out any of the other 2,500 videos right here on the channel. Thanks again. I appreciate it. Enjoy your day, and I'll catch you again later in the